Hi there, Serial Trader here. Going to do an update on the major US indices. We'll start off here with the wave chart on SPX. And since my last video, we've had more pattern development. So still have this nice 5 down from the top for a larger AR1. And I think we're still in the process of correcting that 5 waves down in a move to the upside here. So from the low, still like we have a nice 5 waves up for that larger A. Looks like we have a nice 3-wave decline, possibly in a flat where we have a 3 down for A, 3 up for B, and then a 5 down for C. It's not quite an idealized flat because the C wave went a little deeper than you would expect. It would be fine if it was an expanded flat, but this B wave didn't actually get above the origin of A, so it's not the best expanded flat. But anyways, the overall message here is that we have a 3-wave move down to a higher low. So I do like that we have an A up, 5 up for A, 3 down for B, and I'm looking for a 5-wave sequence to the upside to complete that C of a larger B or 2. And at that point, once we get up into this area, possibly the 618 retracement zone, or maybe a little deeper, that'll be an interesting area to try and put on some bearish positions. But I don't think we're there yet. A lot of people, they see this big move down, they turn bearish, and, they're probably correct in turning bearish, but the thing is, you need to correct that first before you actually go down and make those new lows. So if you shorted this first retracement here, this 50% retracement, you got a decent move down, but I don't think you're going to just go down so easily and make those lower lows without further correction first. And that's certainly what the wave pattern is suggesting at the moment too. And a few things to point out. If you just do a Fibonacci retracement from this initial 5 up for A, you see we came down to right around that 786 retracement zone. A deep retracement, but a internal retracement nonetheless. And now we've started reacting quite strongly into Friday's close off that level. So I'm long once again some ES futures, and my initial stop when I was building a position there on Friday, my initial stop was below the 28.55 lows there, but now I've moved it up to just below Friday's lows there, which was let's see here, 29.01. Let's just call it 2900 to make it easy. So bullish against that 2900 area, looking for a move up here. And if we just do some measurements, so if we do relationship between the proposed A and C, and let me just put the equality relationship up there. So equality between A and C would get us to 3182. That'd be right around that overall 618 retracement of this initial move down, which is at 3188. And let's just call it kind of the 3200-ish area. Seems like a pretty attractive technical area to go and touch before potentially dropping down here in either a larger C wave or third wave. You got to be nimble in this market. There's opportunities both long and short. Don't be a perma bear, don't be a perma bull. Just play the action as you see it. So right now, at least short term, looking for a move up here to around that 3200 area. At that point, reassess and likely look to establish some bearish positions. And if we just throw a parallel trend channel up here, so connecting the origin of A, the origin of A off the termination point of B in parallel with the termination point of A, that gives us a nice channel to work within, and maybe gives an idea as towards the timing of this move. So if we get up to that upper boundary line, this corrective channel, if we kind of stay within this channel, let's see, that gives us March 10th or 11th as a potential timing area. So that would be kind of middle of next week potentially to look for this thing to peak out. That's just a little bit of a guideline. It could happen sooner or take longer, but just for a nice kind of symmetrical look to stay within this channel largely, sometime in the middle of next week would be suggested by that. All right, so think I've gone through what I want to go through here on the wave chart. And we'll switch over there to the Thinkorswim candlestick chart. Okay. Now on the daily candlestick chart, SPX, this most recent bar here on Friday, kind of reminds me of the previous Friday, where we had that panicky gap down. At one point during the day, we were, very deep in the depths there. And then we had a strong rally back, and we formed a bullish hammer candlestick. And what happened again yesterday, this most recent Friday? Well, we had a gap down. Everyone was probably almost certain we were about to take out those previous lows. At one point in the day, it looked pretty menacing. And then later, towards the end of the day, we rallied back and formed another bullish hammer. So I think that's a pretty good reversal candlestick that kind of complements the idea that we got to come up here and one more wave up in a wave C. So that's certainly agreeing with the Elliott wave outlook at the time, for the time being. Now at the weekly level, let's see what we got here. Weekly level, we basically did a huge doji star on the weekly. You see very long upper shadow, fairly long lower shadow, and just a tiny real body. So on a closing basis, opening to closing basis, very little happened this week, although, if you were watching the intra-week action, it didn't feel like nothing happened. But on an opening and closing basis, very little actually happened. So it was let's call it a consolidation kind of week, which again goes in line with the fact that we're in a consolidation pattern after that initial move down. We have to consolidate those lows before we can actually go and make new lows. Makes sense, right? Okay, so that's SPX. And just to mention, we are still below the 200-day moving average, although it doesn't seem to be playing that much of a role here on SPX. Sometimes you get a lot of action relating to that 200-day. I'm not really seeing a whole lot of importance this time around to the 200-day on SPX, but let's move on to the Dow. So on the Dow Jones Industrial Average, very much a similar outlook to the S&P. I think we got a A up, B down, still looking for a C wave up, and we had a big recovery intraday there on the Dow. It didn't form the same candlestick, but largely the same kind of action. Again, the Dow is still below all of its major daily moving averages here. On the weekly for the Dow, actually kind of looks like an inverted hammer. So kind of a bullish inverted hammer. And that would also argue that we need to go up a little bit more before we can really turn down in a meaningful way. Okay, now again, an inverted hammer kind of in the lower end of a trading range is bullish. But if you're in the upper end of a trading range, a hammer signal is more bearish. So the context of where that hammer signal appears kind of gives it its directional meaning. Just so I point that out. Okay, now on the Nasdaq Composite, where are we? Here we go. Nasdaq Composite, it has more of an interaction thus far than the other two indices with its 200-day simple moving average. You can see a week ago on Friday, we breached below that 200-day moving average, but quickly recovered and closed up for the day. So that was a big reversal candlestick. So again, same idea on the Nasdaq. We got our initial move down. We got an A up, B down, looking for a C wave up. Now this Friday, yesterday, also reminds me. So we had the gap down. We nicked the 200-day simple moving average again, but then recovered intraday and closed up towards the highs of the day. So again, looking for another wave up before we can really roll over here and make new lows. But it's just going to take some time for that to play out. So short term, long looks like the trade. A little less short term than that, it'll probably be a shorting opportunity. That's really the underlying message here that I'm seeing. Weekly chart on the Nasdaq. Let's have a look. Similar to the S&P, so we got basically a weekly doji star, long upper and lower shadow, small real body. So again, just kind of an indecisive consolidation type of week. All right. That's the Nasdaq. So we'll move on to the VIX. Now the VIX also did kind of a similar setup to it did on that previous Friday. So on that previous Friday, we had a big VIX spike up. We went almost to 50, got to 49, 48. And then intraday, we had a big rejection from that spike up and closed towards the lows of the day. And that ended up being a nice short-term buy signal. And I think we've just done the same thing here on VIX on Friday, this most recent Friday yesterday. We had this is actually the highest the VIX has gotten since the financial crisis. So that is notable. We're entering kind of a rare period of high volatility, which probably indicates that this overall correction to the downside on the indices is not over. But this signal short-term still suggests that we need to go up on the indices. So we got as high as 54.39 on the VIX, and then a huge rejection intraday and closed near the lows of the day on VIX. So that's a short-term buy signal. Nice VIX spike and then rejection. Again, it complements the analysis on both the waves and the candlesticks on the indices. So VIX is certainly in an uptrend, and on a slightly less shorter term basis, that is bearish for stocks, but this is a short term buy signal having this large inverted hammer in the high range here on VIX. Okay, so that's all I really want to point out on the daily VIX chart. Now I do want to go through the VIX VVIX tool, because that once again is suggesting some short term upside. So here we have a divergence between VIX and VVIX. VIX made a new spike high on Friday, and VVIX did not make a new high, so that's a divergence between VIX and VVIX. That, of course, suggests that SPX will likely have a reversal here, which it already started to on Friday, and we need to go up here, one more wave up again, as the wave analysis is suggesting. So one more wave up in SPX, and then we'll be looking for a potential shorting opportunity. But I just thought I'd point out all these kind of complementary things that all suggest we have some short-term upside before we can really roll over big time. And a lot of things are pointing in that direction. All right, so just to summarize, as far as the trade goes, I am long against Friday's low, and I'm targeting around that 3,200 area, give or take. Might come up short or might exceed that, but until we get some more pattern development to the upside, that's kind of the rough target for now. All right, I'll certainly update next week when something significant pops up, and say we get a completed looking C wave, 5 waves up, start to roll over. I'll certainly try and keep everyone abreast of that. Okay, have a good weekend. Serial Trader signing off.